Market anxiety here. Not talking to Scott Crothers from Stifel Nicholas. Good morning, Scott.
Good morning, McGraw.
All right, what happened yesterday? We were up and then we were down. What's going on?
I know. Yesterday the Dow lost 380 points, closed at 25,029 in basically another wild day on Wall Street. We were up 160 points in the morning and started to fade. Then we lost 240 points in the final hour of the trading. For the month, we were down 4.3% and snapped a 10-month win streak, the longest win streak since 1959. So not a great day yesterday.
All right. Now, they also revised fourth quarter GDP?
Yes, they did. Revised fourth quarter GDP came in at 2.5%, down from 2.6% on the first look. Consumer spending was strong, but producers could not keep up, so we had more imports, which brought the number down a little. For the quarter, which is typically the slowest quarter, we expect about 2% growth, but we have a lot of stimulus, so it might be a little higher. For the full year, most economists expect GDP will grow 3%, so we'll see if those numbers come out.
All right. Now, what about our friends down on Pestalozzi Street, Anheuser-Busch? What are they saying?
Good news out of Anheuser-Busch. They reported earnings this morning and expect this year to be strong. Fourth quarter revenue was $14.6 billion, and they made a profit of $3.04 billion, much better than the $400 million in the year-ago quarter. They have saved $2.1 billion from synergies in the SAB Miller deal and expect to save another $1 billion over the next few years. This year should be strong, but we will get off to a slow start because of the increased spending in the World Cup in Russia in June and July. So great news out of Anheuser-Busch.
Mm-hmm. All right. And then I'm afraid to ask, Harvard's Endowment. What's this story?
Right. It's Harvard's $37 billion endowment fund averaged 4.4% per year over the last 10 years, underperforming most of their peers and mostly due to bad investments in natural resources. They wrote down $1.1 billion of value in natural resources after buying into Central American teak forests, cotton farms in Australia, timberland in Romania, and eucalyptus plantation in Uruguay. If Harvard had invested in a simple 60-40 split in stocks and bonds, they would have 6.4% per year. So they underperformed by about a third of the 60-40 mix. So.
Mm-hmm. Interesting. That is interesting. All right. Markets today after that wild ride yesterday.
Well, today the Dow looks off 60 points on the futures. We have a very busy day with a few earnings from retailers, vehicle sales, and ISM manufacturing index, and we hear from another Federal Reserve official, Bill Dudley, today. So.
Scott Crothers with Stifel Nicholas. Thanks for the insights. Have a good day. We'll do it all again tomorrow.
Sounds great.